So let's talk about those precious metals first, because obviously it has been almost unprecedented, the moves that we've been seeing in gold and silver over the past few sessions. And how much is it fundamentals and how much is it speculation, and can we separate them, and then how does that inform how you trade them?
Yeah, it's been very entertaining. So we have to go back roughly 4 decades to see similar types of moves. If we look at silver, for example, the Hunt brothers, when they cornered the market, we saw kind of similar intraday moves. But as a backdrop, you have to remember there's never been more money in the system than the current environment. It's never been easier to trade via technology. And we have sort of the proliferation of leveraged instruments, options, all this type of stuff. So market moves and volatility are increasing. So if we look at sort of the catalyst on Friday, obviously the Kevin Warsh news, he's viewed as sort of a hawkish pick by the market. I believe he'll be more pragmatic. It's really his views on the balance sheet and quantitative tightening. So he actually does support lower rates, but he wants to reverse basically what Bernanke had done via the wealth effect and asset price inflation through QEs, right? So you get rate cuts, but the view is that it's triggered through the asset channel and lower asset prices.
So in other words, all that money that you talked about that's out in the system, some of that comes back, or some of that is shrunk.
Well, if he followed through on his prior statements, yeah, it would be a negative for asset prices, and then we get rate cuts in response to that. Now, it's unlikely that we'll go down that path. And then, of course, there was month-end effects. There was a large option expiry as well. So if we look at, kind of where we're at, so we had this large correction, but structurally, especially the case for gold, is still very compelling, okay? So we look at it, if we sort of rewind the clock a little bit, it was the Biden-era sanctions that led central banks to de-dollarize. And of course, geopolitical risks are rising, investors are looking for stores of value. So we're seeing central banks buy a significant amount of gold. And if we look at the headlines overnight, President Xi has come out and said that he wants the RMB to be a global reserve currency. And China has been a very large buyer of gold. The Polish central bank recently just bought 150 tons. Another very interesting development there is actually the crypto community. So Tether has a gold-backed stable coin. They own 140 tons of gold, and they're doing physical settlement. So they're storing the gold in vaults in Switzerland. And they're purchasing on the order of 2 to 4 tons a week of gold. Then, of course, institutions are under-owned, and the world is really sort of scrambling to find an asset that will perform in this type of environment, again, where the geopolitics are rising, and we have sort of broad debasement of currencies, right? So we're looking for an anti-dollar.
So I guess I would go back then to my first question, which is, okay, so you have all of this fundamental buying of dollar, but then you have on top of that the leverage bets, the options, the speculation. So what is the fair value? How do you even determine where gold prices should be just based on the fundamental demand? Because that other stuff can come and go.
Yeah, so it's of course very hard to disentangle those effects. A firm like ours is a systematic manager, so we incorporate many types of ideas in the strategies, from fundamentals to very technical and more pattern-driven types of inefficiencies in the market. But clearly it's an under-owned asset. You have this marginal demand through these large players. So it's really something that I expect will continue to perform. And if we look at 2025, gold was up 65%, silver was up 140%. We had a very torrid start to the year in both. And these types of price dynamics, it's very interesting, right? Because they're sort of very hard to there's a wide range of outcomes potentially. But longer term, if it's sized correctly in a diversified portfolio, it just makes a lot of sense.
Now, when you say it's under-owned, you mean by institutions? Because it seems like the latest leg up has been, at least in part, retail driven.
Yes, absolutely. But if we look at institutional investors globally, gold is, again, not a large allocation, right? So investment committees will be looking at it, thinking about it, whether it makes sense in their portfolio. And of course, gold is a less liquid market than, say, the S&P. So again, from a flow perspective, if we get sort of a shift in psychology on ownership of gold, that can lead to very explosive price action, which is partly what we're seeing.
Now, when you talk about the world trying to look for an alternative to the dollar, Why has it been lately that gold has been that and Bitcoin has not?
Yeah, so this is a sort of a struggle, right? And one of the use cases of Bitcoin was that it would be a store of value. And markets are a lot about narratives. So there is like a horse race to figure out which asset will have those properties in a world where currencies get debased, right? So clearly, with the recent moves in Bitcoin, it's much more correlated to the stock market, particularly technology stocks. And it's just not emerging as a potential candidate for that, which is interesting because we could see more rotation out of the crypto industry into kind of the more traditional rails like gold. Now, silver is not something that's owned by central banks. Mm-hmm. It's more speculative. The interesting bit there is that it's actually tied to the AI build-out. So solar panels, 94% of solar panels actually use silver as an input. And prior to the run in prices, it was about 3% of the cost of a solar panel. That's now gone up to about 40%.
Wow.
So there's this sort of like indirect link to the data center build out, all the CapEx, et cetera. But central banks are not buying silver. So if you really want sort of a good candidate for something that will protect your purchasing power, the rising geopolitical risk globally, it's pretty clear that gold is emerging as that candidate.
Since you've brought up tech a few times, so I do want to ask you about that. I mean, when you're talking about silver prices going up, we know memory chip prices have been going up, costs have been going up for the data center build out. So how do you think about that in the context of your ownership of tech stocks and your strategy around tech stocks?
Yeah, so investors have to be more selective about where they go in that value chain, okay? Now, the thing is, we just had earnings, right? So we have the CapEx projections from, say, the large hyperscalers. Like if you look at Microsoft, Google, Amazon, Meta, they're going to spend $460 billion in 2026. So for investors, there's all these pockets of value, and you really want to focus on the inputs into the data center build-out, where firms have moats and a lot of pricing power. So memory is a really interesting one. So OpenAI secured 40% of the global DRAM market in October. And if you look at data centers that use a certain type of memory, it's called high bandwidth memory, HBM. There's only 3 companies in the world that can produce it at scale. One is in the US, it's called Micron. The other 2 are in Korea, SK Hynix and Samsung. And if we look at the KOSPI, last year it was up 90%. It's selling off today, but it's up 25% again this year. And what's interesting about that is they have an enormous amount of pricing power. So memory prices are going up on the order of 50 to 100% every single month because the demand is insatiable. And there's a lot of spillover effects related to that. So consumer electronics, and we saw it on the Apple earnings call. There were questions around the cost of manufacturing the iPhone and concerns about their ability to secure memory. So there's all these sort of spillover effects tied to the AI narrative and this data center build out. But if investors can find these firms that have that pricing power and they're a core input into the investment, there's still a lot of value fundamentally in those companies.
Well, and it's really interesting you say that because it's not as though this Micron situation is a secret. The stock has already soared, right? And you're seeing the hard disk drive makers that are also adjacent to the memory business, SanDisk, Western Digital, et cetera. All of them are at or near records, but there's still room to go up.
Yeah, so what's interesting about that is they're re-rating their earnings so quickly that the forward multiples are coming down. So we're in this memory super cycle effectively, and I don't see that changing in the foreseeable future. This AI build out will happen. It's the largest industrial investment cycle in the United States since World War II, right? And a significant contributor to GDP as well.
Are there other places besides the memory, are there other sort of emergent places that you think investors should be looking that are tied to that sort of picks and shovels of AI?
Yeah, it's the picks and shovel. That's a great way to describe it. You really want to focus on these inputs that are specialized, and there's just a massive backlog in terms of order books. So another one is transformers. Just to power the data centers. It turns out that a lot of European companies like ABB, companies like that are very specialized in the manufacture of these types of inputs. And again, that's like another pocket of value potentially where they have a lot of pricing power and they can pass that through. And again, the CapEx is just going up and up and up. There's this big push on this technology. The spending is going to happen.
Christian, really interesting stuff. Thanks for coming in. It's good
Thank you,
to see
Julie.
you.
It's great to see you.
Wild by any asset standards. I saw one measure this morning that said gold's been as volatile as Bitcoin, which is just bizarro world that we're in right now. What do you make of those moves, which I know are, some of it's technical, some of it has to do with liquidity. But what is your takeaway from watching what's going on there?
Well, one of the reasons we're not big investors, I mean, we do own the metals in our macro cycle opportunity strategy, which is one that's focused on next generation technologies that will change the way we live. So space, robotics, et cetera. We own them in there, but we don't own gold and silver. And though we have a digital asset strategy that was on demand from our clients, we really want to have a way to value what we own. And it's very difficult to value gold and silver outside of the demand question. And so you had central banks sort of starting this movement, and then you had the retail investor jumping in, and now you've probably got the hedge funds selling the metals. And I think it's just a good time to sit on the sidelines. If they pull back further, I don't think it's a bad long-term investment, but I prefer to be, in something where I'm owning a piece of the company and I know what I'm paying for it through earnings.
I'm curious, Nancy, if you share any of the concerns that seem to have driven at least some of the buying that we had been seeing with metals, right? And some of that has to do with inflation concerns. Some of it has to do with concerns about the long-term value of the US dollar, things like that. Do you share some of those concerns? And if so, are you hedging it in other ways?
Well, I think, the dollar is still the world's reserve currency. So I understand it's weaker. I understand the president thinks it's a good idea to have a weak dollar. We don't agree with that. But I do think you'd have to be pretty pessimistic to believe that gold is the only investment you can own from a defense standpoint. So we were broadening out our portfolios over a year ago, and that's how we've been able to, both our value and growth strategies dramatically outperformed the S&P last year. So you have to be thinking ahead. I would just stay away from this trade because it turned into a momentum trade. And there wasn't anyone that could really explain why they thought it was going up so much. So I would move aside and wait for things to settle. And then if you want to own gold again, you step back in then. But these swings in these sort of safe haven investments are a little bit disturbing.
Tom, coming over to you here, your thoughts on these moves in precious metals. Feels like I just talked to you and prices were going sky high. Now they're completely collapsing.
Good morning, Brian. Thank you very much for having me on. Yeah, I mean, the dam broke to a point, right? I mean, I think anybody could realize that the parabolic moves we were seeing, last week and then really for most of this month were not sustainable, okay? And it was going to take some sort of a catalyst to reverse it. And when it reversed, it was going to tumble. That's the way metals are. That's what everybody has to understand if you're going to trade them. The catalyst always seems to be a surprise, and it was last week with Warsh being nominated as the Fed chair. Now, he isn't hawkish by any means, but he does have some unknowns attached to him regarding QE and sort of Fed staffing. And that was the catalyst we needed. The dollar firmed, and all these weak late hands in gold and silver ran for the exits, and then down it goes.
Tom, you know me, I still love my investing jargon, so I'm going to dip into my bag of tricks here. Do you try to catch a falling knife in gold and silver here?
No, I don't think so. I think you can wait a little bit longer. I mean, in the end, these things got very stretched. I mean, the moves, especially in silver last week, I mean, they were truly sort of historic, and I've been watching silver for 20 plus years. I think that there's more froth to come out of this. I think at some point, certainly they will be interesting, but I think you can be a little bit patient. The best way to do it is if you're itching, just buy a little, right? Then let it come in, buy a little more, and kind of build a position over time. That way you're not trying to pick a spot, catch a knife on a very volatile asset.
Inez, I learn something new every day in markets. Today I learned that the Chinese call silver the devil's metal. I had no idea about that, but wow, you've been covering this move all the way higher in these metals, and now you're covering them on the way down.
Yeah, and a dramatic way down, and especially when you take a look at gold, which is such a large, has such a large market cap, and the dramatic fall that we saw in both of them. But as Tom was saying, yes, it was a parabolic move, and there were plenty also of strategists that were warning about that parabolic move. I will say, though, JP Morgan came out with a note just yesterday basically saying, stay the course on gold, looking at gold.
Oh, of course. They're coming out with that crap, Inez. I mean, of course.
Yeah, they're coming out with a year-end price target of 6,300 for gold, basically saying central bank demand, investor demand for gold. On silver, they're actually saying that the price floor, they see it between 75 and 80. So they don't see silver pulling back as much or losing all of its gains that it's made. But silver certainly has been the one that has been most parabolic out of those two.
I'm glad you mentioned that, Inez, because Deutsche Bank out this morning staying true to their $6,000 an ounce call on gold. Always interesting to see that. And Brooke, following Bitcoin, I mentioned at the top of the show that the team over at Bernstein, they have been major Bitcoin bulls. They think this could bottom out Bitcoin at $60,000. But again, at the same time as gold and silver under pressure, cryptocurrencies really under a lot of pressure as well.
Yeah, cryptocurrency certainly falling to some of the historic lows that we've seen over the past year. Crypto now hovering around 80,000 for the first time essentially since April. And largely we see sort of investors backing off this risk-on sentiment sort of play here of cryptocurrency as we make our way into what was or what is sort of a volatile week to kick off this week, another big week of earnings after we got some major tech names last week that really led to a bit of a slide in the market over Thursday and Friday. And now what we're seeing is that this cryptocurrency falling, Bitcoin down around 80,000, now currently, as you can see on your screen, hovering around 78,000. And we haven't seen these lows since April of last year. And that's really telling. I mean, just a few months ago, we were talking about Bitcoin crossing a record high of $126,000. And now to see it back off that significantly is definitely worth taking note of. And many saying that this could sort of hover around these areas for quite some time.
Tom, I could make a case for one, like you just mentioned, nibbling a little bit at the sell-off on gold and silver, but crypto, especially Bitcoin, I don't see the near-term catalyst. Even if that Clarity Act passes, I don't think that opens the floodgate for crypto to hit back over 125,000. Was that the record high last year?
Yeah, I actually agree with you. I think that, look, Bitcoin's falling for the same reason that gold and silver are falling. It's kind of all the same trade, right? Think of it like kind of air coming out of a balloon. These are all sort of destinations for speculative capital, and it's worked, and now it's not, and now the capital's fleeing. I agree. I think that the sort of the fundamental backdrop for gold and silver remains very much in place. They got extended, now they have to come in, but the sort of medium-term outlook is still bullish due to fundamentals. Bitcoin, I feel like we packed in a ton of really positive news that everybody's been waiting for in 2025, and you got to move. But now everybody's looking around saying, what's next? And I agree with you. I don't see what the good answer is. So I think that there could be some more pain in Bitcoin compared to sort of gold and silver.